5, 4.
Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Dr. Sadek Wahba, Chairman and Managing Partner of I-Squared Capital and author of Build, Investing in America's Infrastructure, as well as we have Nicolas Rubio, CEO of the Americas at Meridiam, and we're here to discuss the crucial role of cross-border joint ventures and alliances, global trade, localization, and digital ecosystems. By leveraging the synergies between these elements, organizations can remain agile, mitigate risks, and create lasting value in the face of uncertainty, not to mention that it is a key policy issue for the U.S. It's great to have the both of you with us. Welcome to Trade Talks. Dr. Wahba, last time we spoke and framed the conversation around investment in U.S. infrastructure, it was more about strategic competition and domestic policy. And it certainly has evolved since then, as we have we have a number of variables that have entered the equation.
First of all, thanks very much, Jill, for having me and Nicolas on the panel. Appreciate it. You're absolutely right. I think we were talking in the past about strategic competition, which continues to be a critical element, as we have seen the trade discussions, if I could use that word, between the US and China. But that has, of course, spread into a trade discussion with the EU, with our Asian allies, Japan, South Korea, India, and others, as well as some of our closest neighbors, which is, of course, Canada and Mexico. I think we should distinguish between two things: tariffs as a strategic element and tariff as an economic policy. I think when it comes to economic policy, notwithstanding the rhetoric, there's a very clear understanding that net tariffs is not an ideal instrument in terms of ensuring that we can on-source businesses in the United States. From a strategic perspective, I think the president is using tariffs as a means to force people into new bilateral agreements and multilateral agreements. And I think from what we're seeing, that seems to be bearing fruits. We'll know in the coming months what kind of outcome we get, but clearly everyone is looking to sign up an agreement. The UK has done it, India has done it. So there is a desire to be able to sign these agreements with the United States very quickly. China has agreed on a moratorium and put that behind us and move forward.
Right. And Nicolas, when we think about investing in U.S. infrastructure, you need to be flexible and understand how increasing import costs and what the operating environment is going to look like without compromising the point of having quality infrastructure in the U.S. Explain to us what some of these challenges are as you're trying to figure out what tariff policy is going to look like.
Yeah, thank you, Jill, for having me, and it's a pleasure sharing with Dr. Wahba the panel. I mean, we are long-term investors in infrastructure. We built in the last 20 years 130 projects in 4 different continents and continue to operate those projects. So the only way we can take a look at what is happening now is to avoid the noise, let's say, and try to focus on which are the trends. And I agree with the two phases of the tariff policy that Dr. Wahba mentioned. I think what we see is that on the long term, there is a clear trend of bringing back to America manufacturing. That is going to happen, and in my view, there is bipartisan support to that fact of bringing back manufacturing. And yes, there is going to be an impact of those tariffs as well on the prices and in general. I think in the world of infrastructure, right now, one of the most critical elements is the construction industry. The construction industry is under stress. I've been doing business for over 30 years in this environment, and I have never seen it as stressed as now. And the bringing manufacturing back home, it's adding pressure on the construction industry. If I look at the past 4 years, construction prices have increased by 70%. And this is going to continue having it's not going to release pressure on that environment. So that's it. The view we take is, okay, let's keep the long term, let's keep the perspective. I think that's going to happen, and we have to learn how to navigate in this environment.
Yeah, and Dr. Wahba, it's largely going to come down to private-public partnerships. I think the private sector is going to be incredibly important in terms of executing on this in the absence of, understanding what policy is going to look like in the U.S.
No, absolutely. And I think Nicolas brings a very important point, which is if you take a step back, in the short term, you're going to continue to get pressure on inflation because there's no doubt that when you increase tariffs, when you increase uncertainty in the market, people assume that prices are going to go up, and with tariffs, prices will go up. And so in the short term, you can see continued push towards higher inflation, which means, of course, interest rates are not, in my view, expected to come down for quite some time. So that's in the short term. In the long run, I think once we are able to settle, and I think that's the aim of the president, which is to be able to quickly come to terms with tariff agreements with some of our key partners, once we have that behind us, then people are able to reduce the uncertainty and, in fact, start investing more. Your point about public-private partnership is absolutely critical because we're seeing it as we speak right now in the bill that is being proposed to Congress is a significant reduction in government expenditures, even though that may ultimately increase also in terms of our deficit. So when we have our deficit going from what is 6+% of GDP to what is expected to be over 10% of GDP, and debt of 120 to 135 or even 150% of GDP, you need to find different solutions than relying all the time on the government to be able to improve our infrastructure. And as things get pushed down to the states, you're going to see more and more requirement of public and private partnerships. And that means greater efficiency, that means greater productivity, as long as we're able to provide a service that is acceptable to the consumers at the right price.
Right. And Nicolas, you share that view as well in terms of the critical need for PPPs.
Yes, I think there's a nuance on the impact of tariffs on prices, if I may. Yes, it is having an impact, but if you look at the very large contracts that are being funded with federal funds, it's not going to be as big because those projects already abide to the Buy America laws and Buy America regulations. So the content of foreign goods in those projects is not that big. But I think the pressure on construction is in any case there. It's the aging infrastructure, it's the data centers. You just look at the agreements that the president had in Saudi Arabia, and you look at it, and it's everything investing in data centers. And there are some other critical elements like surface transportation, like water. So that's going to continue, and that is happening at a time where local government funds are drying out. The federal government in the past years has been providing a lot of funds to local government, and that is not going to be the case anymore. So I think it is on us, the private sector, to reach out to that local government with solutions that have both a financial and a technical component to those critical problems that they have. I think PPPs are going to be fundamental in this environment.
And it's a natural, Jill, extension, right? The previous administration spent an enormous amount of capital and time in developing the IIJA, which brought $1.2 trillion to infrastructure. That was critical because you needed to jumpstart reinvestment again in infrastructure and deal with critical infrastructure, which is in a very bad condition. I mean, the second phase is a natural extension of this, which is we need to continue into sustainable, smart, efficient infrastructure. That means new technologies, by the way. That means continuing what's already been done. And that the government cannot continue to add another $1 trillion or $2 trillion to infrastructure. So it has to come from other sources. And the capital markets will provide that. The private sector will provide that. And that's what Nicolas is mentioning, which is you need to be able to bring in that private capital that continues to invest in a sustainable way.
Right. And Nicolas, I would also add that the efficiency needs to be brought back into the process as well. The time for permitting needs to be cut down. With the technology evolving so quick, in order to satisfy that demand that's required, let's call it from grids and other physical pieces of infrastructure within the U.S., the system needs to be made more efficient. I also think that it needs to be more auditable and transparent, which is a different conversation. But there are some barriers that are holding back investment when you think about it from how capital intensive it is, and then the amount of time it takes on the return on investment. I think that's something that is concerning to investors when it can be very cumbersome to get these projects off the ground.
Jill, you're perfectly right. That's exactly the point. There is this balance between an extreme big need, and the energy, water, infrastructure, everything is a big need, and then the ability to deliver in an uncertain environment, if you want. I think in situations of uncertainty is where the private sector has to look for certainty, for reliability in the investments it looks at, and one of the best ways of ensuring that an investment is going to be resilient is precisely that it provides solutions, that it's more efficient, and that it delivers infrastructure in a better way than by other mechanisms. So I think that is going to be a fundamental part of it. And we many times when we look at infrastructure, we only look at the funding side of it, but the spending side of it is as important as the funding, and really need to do more infrastructure with less dollars, and that's something that the private sector can really help doing.
Dr. Wahba, one of my concerns is with the evolution of technology and how quick products are being developed, and we have to, whether it's data warehouses or providing, alternative resources to the electric grid, and everything is, AI is part of every project these days. I'm hoping that a cyber first mentality when it comes to design, when it comes to engineering, when it comes to policy is something that's within the equation, because we typically talk about how long it takes, where the investment's coming from, what areas are ripe for investment. But I feel sometimes the national security and cybersecurity issue is overlooked.
Yeah, that's a very good point. And as you know, I served on the President's National Infrastructure Advisory Council, which was created in the aftermath of 9/11 to be able to protect our infrastructure against cyber attacks. And of course, back then, the nature of the cyber attacks were fundamentally very different than what we see today. When you look at, for example, the Russia-Ukraine war, we find out that the use of drones has played a fundamental role in that war. And so we need to protect ourselves against drone attacks. We need to protect ourselves against not just traditional malware, but what we also call operational technology cyber attacks, which is the ability to penetrate physical equipment rather than just the IoT component, physical equipment, and take over those machineries if you want. It could be in a hospital, it could be in an airport, it could be anywhere. And so that requires a huge amount of investments because you don't need to just upgrade, you need to upgrade the entire IT system of some of that infrastructure, which in and of itself is going to cause investments of billions of dollars. So the question becomes, who's responsible for that? Is that the state? Is that the federal government? Is that the private sector? And ultimately, who pays for it, right? Because the truth is, it's either taxpayers or the users who ultimately have to pay for it. If we need to upgrade the water company, the question becomes, is it the user who pays it, or is it the state taxpayers, or is it at the federal level who pays it? And that's an important question that unfortunately is still unresolved.
Right. And Nicolas, this goes back to your point about sustainability within infrastructure investments. As we're seeing now, our infrastructure is crumbling. So when you're thinking about investments for the next generation of infrastructure, sustainability is going to be key to that, so that we're not constantly having to make these updates or start from the ground up or integrate legacy systems that just didn't have adaptation. And when I mean sustainable, I don't necessarily mean sustainable from the environmental point of view. I mean sustainability from the long-termism and adaptability point of view.
Yes. The American Society of Civil Engineers publishes every year a scorecard of rating the U.S. infrastructure. I think it came recently, and the ratings are from B in ports to D in sewage and transit. So it's not very good rating what we get in infrastructure, and that is where I think the private sector can really address. There is one important element, Jill, that you mentioned before. It's permitting. Permitting has been limiting the availability of shovel-ready projects out there, and if you cannot, you have to upgrade, you have to build new infrastructure, and you need permitting streamlining. And we believe that we may have that legislation with permitting streamlining at the end of this year, probably. I mean, there's a lot of bipartisan support. I think it's always difficult, and if that happens, and in that environment that you were mentioning of, the AI is not only about cybersecurity, which is a top priority, but it's about, again, the data centers that are needed, the energy that those data centers need, the water resources that those data centers need for refrigeration. That's creating a huge impact. This is going to be critical for America to be on top of that AI revolution.
Right. And Dr. Wahba, to wrap up here, I'd like to get your outlook as well. I find it quite encouraging that you're hearing bipartisan support around this.
No, I think there is bipartisan support. There's no doubt about it. I think the challenge is, like, unfortunately, many things, is who's going to pay for it. There are today a bipartisan support also in reducing the budget deficit and reducing the debt. And it's very difficult to do that without, unfortunately, cutting our expenditure. So the question is not cutting expenditure writ large. The question is cutting government expenditure so that you can encourage the private sector to invest. And then the question is, what are the modalities by which the private sector can invest in cybersecurity, can invest in sustainable infrastructure, the way you described it? And I think that is going to be the challenge over the coming period. We need to find the mechanisms that allow us to bring in the private sector in investing in infrastructure using models that are acceptable to the consumers, acceptable to the regulators, and ultimately acceptable to the government writ large.
All right. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill
Thank you.
Malandrino, Global Markets Reporter at Nasdaq.